This meeting is being recorded.
So I am Tiffany Belfield Elamine. I am the Food Systems Equity Organizer here at Community Farm Alliance. And some of the work that we're doing, we're underneath of the Farm Service Agent Cooperative Agreement. And so we are working really close with state and federal USDA departments and really focusing on FSA and their programming and their technical assistance, and making sure that everybody understands, comprehends, and knows how to access all that they do, which is a lot of technical assistance, programming, lending, funding, business support, and all of those things. So I was definitely lucky and very blessed to get in contact with Jeremy Stevenson. Shout out to the team. Lori White made that great connection for us. And he is the Kentucky State Outreach Coordinator, not Kentucky State University, but the state of Kentucky Outreach Coordinator. And he reached out to a few of the folks that he works with and came up with this amazing panel. And they're going to talk about all types of different things. So I'm going to introduce them, but I'm going to let them introduce their work and themselves. So I don't over talk what they do, because I really don't know all the things they do. I'm just as excited to be a part of learning all the things that they do. So give me just a second, because my screen jumped. 1 second. Wow. Well, it didn't come up, so I'm so sorry. So we have Miss Angela Watson, we have Jeremy Stevenson, and I know that Angela was going to begin. Is that right?
Jeremy's going to kick us off today, Tiffany.
Briefly.
Jeremy's going to kick us off. Awesome. So I'm going to pass it over to Jeremy. Jeremy, I cannot find my email with my agenda. It's like it disappeared. So I will let you introduce the panel, if you do not mind, and I'll let you take it over from here. And thank you all so much for being with us this morning.
Okay, thank you very much, Tiffany, and thank you for putting all this together. We really appreciate it. I mean, this is great working together with Community Farm Alliance. Of course, I'm Jeremy Stevenson, the FSA Outreach Coordinator for Kentucky. I've been with the agency for about 20 years, and I've been in this role for about 2 now, and I really enjoy what I'm doing. I'm grateful to be here this morning with all my colleagues here, and they'll be giving y'all a couple of presentations of all of our programs we offer. And the Farm Service Agency implements agricultural policy, administers credit and loan programs, manages conservation, disaster, and price support programs. The purpose of FSA and the Community Farm Alliance partnership is to provide important technical assistance, outreach, and education that will equip farmers with the resources needed to access and participate in FSA's programs and services. Kentucky, the state office is located here in Lexington. We have 64 offices serving all 120 counties in Kentucky. County committees oversee our FSA programs for Kentucky farmers and ranchers in their local communities. Committee members are farmers, ranchers, and landowners elected by local producers. And with that, I'm going to hand it over to Angela Watson, who will go over some farm programs.
Good morning, everyone. As Jeremy said, my name is Angela Watson. I work here at our state office as well. I am a program specialist, so that means I help our field offices with administering the programs that we have. But I am also the beginning farmer coordinator for the state of Kentucky, and in that role, I work very closely with Jeremy on outreach and other items. And even though my title is technically beginning farmer, I work with all of our, for lack of a better word, specialty groups. So our beginning farmers, veteran farmers, historically underserved producers, as well as limited resource. So that includes all of our minorities, women, and everything like that in that role. Today, we're wanted to tell you guys quickly kind of how to get started with FSA. what we do. And, Jeremy gave you a brief overview of what FSA is and what we do. So some of you may already be familiar with the agency, and some of you may have not heard of us at all. When I started with the agency over 19 years ago, I didn't know FSA existed. Even though I grew up on a farm, that was something that I didn't realize was available. And so it's been really great to know and learn everything that FSA does throughout my career. We are under the umbrella of USDA, and we are specifically designed to serve farmers. After all, service is our middle name. So we provide federal assistance for farming of all kinds, big, small, crops, cattle, and everything in between. There really is something for everyone in the ag community here at FSA. As the face of agriculture is changing, USDA is also changing its footprint to meet the needs of all of our producers. And at the end of the presentation, we're going to give you some online resources that are amazing, as well as contact information for all of us, so that you can reach out if you have any questions or anything. But as Jeremy mentioned, we do have service centers throughout the state that serve all 120 counties. They are your boots on the ground go-to resource. So the things that we talked to you about today, you can take to your county office, locate that local service center. We can help you with that if you need it. And then they're going to be the ones that really help you out when it comes to getting enrolled and things like that. So what can FSA do for you? FSA, we have two major categories. We have farm programs and farm loan programs. So I'm going to speak to you about farm programs, and then the other person on our panel, Anna, is going to introduce herself and speak to you in more detail about our farm loan programs. FSA farm programs are implemented by Congress as part of the Farm Bill. There are what we call permanent farm programs in place to assist with a variety of needs. These include various disaster programs, conservation programs, safety net programs, and also risk management programs to help farmers prepare for and recover from an unexpected loss. Our disaster programs do just what they sound like. They help you after a natural disaster has caused damage to your crops or to your land or things like that. And then our conservation programs address the conservation issues on our farm to help preserve our drinking water, reduce soil erosion, increase wildlife habitat, and lots of things like that, all of which can come together to also help increase production of crops on farms. And then we have safety net programs, which give our producers payments for the crops that they're growing, and that helps keep our grocery bills low, as well as helping our farmers stay in the business of making the food that we all want to eat. We often get what we call ad hoc programs, and it's hard to talk about those because they come and go as a need is met. One good example of that is during the pandemic, we are still actually seeing a number of ad hoc programs that came out that were designed to help alleviate some of the harvesting, marketing, selling, and processing issues that our producer faced due to everything our country has gone through for the last couple of years. So there's always new things coming aboard when it comes to what FSA has, which is why I strongly encourage you to develop a good relationship with your county office. So if you need to get started with FSA, the first thing you want to do is visit your local service center. And here on the screen is a website address that can help you find your local service center if you don't already know it. And there you can have a one-on-one visit with the staff to find out what programs and resources best suit your farm and your needs. Everybody's using their land different. There's so much diversity. And so you want to get that farm registered in your name and get started with developing that relationship. When you're going to do that, some of our service centers are still operating under pandemic restrictions. Those restrictions come and go. Our doors are, I can happily say, across the state open now, but as the pandemic changes itself, we could see some changes to that. So it's best to call or email the county office first and just find out, hey, can I just pop in, or do I need to make an appointment? And what do I need to bring with me? You're going to want to take a deed to get the farm established in your name, get your farm records set up with FSA, and be prepared to discuss with the staff there how you're going to operate your farm. Maybe you want to grow fruit and vegetable crops to sell at a farmer's market. Maybe you are wanting to get into cattle or some other kind of livestock or farm raised fish. All of the ways that you operate your farm are going to influence what programs we have that can help you with those needs. So be prepared to discuss that stuff with the staff. They are also going to collect some basic demographic information, your social security number or employee ID number if you operate as a business. Again, like I said, you're going to have a deed for proof of ownership. If you don't own the land, but are instead leasing the land, they may ask for a written agreement if you have one. If not, there are, of course, other procedures you can go through to get that land, get yourself associated with that land. And if you do operate as a business, additional paperwork may be required so we can get that business properly in our system. Once you have gotten that farm record established and all of your information in our system, then you're going to want to start getting everything together to make sure you're eligible for the programs. So you, as this slide shows, you have enrolled your farm into our database. They're going to give you a map that shows you the farm boundaries and the acreages, the farm acres and cleared, non-cleared acres, that kind of stuff, and give you a farm serial number. And then you'll also be enrolled to get our routine program notifications from the office. We'll also provide you with information on how to go ahead and do that if you haven't yet registered with your farm at the end of the presentation. And once you're registered and you know what programs, now you can start participating in programs. That's what you're going to do going forward. And I should also mention that when you register your farm with FSA and you get that farm number, even though technically we being FSA handle the registration process, once you're in our system, you are also in the system for our sister agency, Natural Resource Conservation Services, who offer a lot of cost share opportunities for things like high tunnels and low tunnel greenhouses, fencing projects, cattle rotation. They are the technical service agency under the USDA umbrella. And so when you register with FSA, that information is also available for NRCS as well as RMA, which handles crop insurance. And many extension offices in the state of Kentucky also want to see that you are registered with FSA when you enroll for some of their cost share programs. So it's good to make that your first step if you haven't already done that. Now that you're registered with FSA, what can you expect from FSA? Our field staff, as I've mentioned, is your go-to person. They are going to be able to provide you with assistance in understanding the programs that we have available. They're going to be able to help you fill out all the necessary paperwork to make sure that you are eligible for that program, as well as eligible to receive any payments generated by that program. They can help you decide which programs fit your needs. And then you're also going to get emails and other outreach materials, invites to meetings like this, local extension meetings and things like that, where we talk more in depth about each individual program when the new programs come out and stuff like that. All right, so as a producer, your responsibility is to do your best to stay informed about, take advantage of all the means of information that we have, whether it's the farmers.gov website or your local staff, our text and email newsletters and alerts and that kind of thing. You're going to want to keep up with deadlines. The county offices do everything they can to make sure you don't miss a deadline. But ultimately, you all are responsible for coming in and letting the producer or the county office know that, okay, yes, I want to enroll in this program. I'm eligible for this program. And then also you can certify to one of those groups I mentioned earlier, which we will talk about in just a second, right now. So the first one I mentioned is beginning farmers. According to FSA, a beginning farmer is any individual who has not operated a farm for more than 10 years. So it has nothing to do with age. It's just how long that have you operated that farm. If you operate as an entity and at least 50% of the members of that entity meet this definition, then the entity can also qualify as a beginning farmer. This definition will come into play on some of the loans that Anna will discuss in just a minute as well. Another specialty group that we have are socially disadvantaged or historically underserved farmers. These are our individuals or entities, again, if 50% meet the definition, who are members of a group that have been subjected to not being as well represented in our programs in the past. And so you can see on the screen that includes African Americans, American Indians, Alaskan Natives, Hispanics, Asians, Pacific Islanders, and women. And the reason these categories, these certifications matter, some of our programs provide an extra incentive or opportunity. If you are able to certify as one or more of these groups, it is possible to certify to more than one. And that way you can, with our crop insurance, you don't have to pay the fee to get the insurance. With some of our cost share programs, the cost share amount is increased if you are a member of one of these specialty groups. We also have programs for veteran farmers, and when it comes to our definition for program purposes of a veteran farmer, it is one who has received their veteran status during the most recent 10-year period. And that is just, in an effort to help our military men and women transition from military life into a life of agriculture, we want to provide some additional opportunities for that. Right now, most of those opportunities are on the loan side, but we are starting to see more and more on my side, on the program side, become available for our veteran farmers as well. And then we also have a limited resource certification. This is an annual certification, unlike the others, which are a one-time certification. And this is any farmer or rancher who both has direct or indirect farm sales that doesn't exceed a specified level, as well as a total household income that is below the specific poverty level for their area. So this varies from county to county, the two levels that are on there, but your local county office can help you determine, or you can use the tool that's on the website on the screen in order to determine if you meet the qualifications to be certified as a limited resource farmer. Okay, we'll have a time for questions at the end. So for now, I'm going to give it over to Anna.
Good morning. My name is Anna Armstrong, and I as well work in the state office here in Lexington. I'm a farm loan specialist. And as Angela said, like the farm program specialist, I assist the field offices in the loan programs. So today I'm going to discuss with you a few of the options we have for loans. We have two different loan types that we work with. We have direct loans and we have guaranteed loans. If a farmer is unable to obtain credit from a commercial lender to start their operation or expand, FSA may be able to help you. So as I said, there are two different loans that we offer. We have direct loans, and that comes directly from the US government, and we provide the money from our office, and we service those loans in our office. With the guaranteed loans, those are originated from a commercial creditor. So like if you went to a commercial bank like US Bank, Independence Bank, they service that loan there at the bank and set the rates there. The direct loan rates are set by FSA. With the direct loans, your application is submitted to FSA. But when you're working with the guaranteed loans, the lender that you're working with at the commercial credit bank is going to submit that application to us from the bank. So there are a few different types of direct loans that could help you in your operation. So the main types we have are the farm ownership loans, farm operating loans, emergency loans, and microloans. So operating loans can be used for multiple purposes. For operating expenses, like an annual operating loan for your livestock, your crop, your vegetables, whatever operation you have at the time. You can also purchase livestock, equipment, and there are certain minor capital improvements to your real estate that you can use an operating loan for. The terms for the operating loans at FSA are 1 to 7 years, depending on what you're going to use that operating for and the life of the security. Our interest rates are fixed, and for April right now, the operating loan interest rate is 2.75, but for May, it will change. We're notified each month what the interest rate is going to be for our OLs and our FOs. So once you come in and you apply for a loan, if we closed it in April at 2.75, but we approved it in April at 2.75, but we do not close it until May and the interest rate goes down, you get the lower of the two. And that interest rate is going to be, like I said, fixed for the life of your loan. The maximum amount we can do for an operating loan is up to $400,000. The first payment on your loan must be made, if it's a term loan, not an annual, must be made within the first 12 months of the closing date. If you have an annual operating loan, it can go up to 18 months from the date of the loan close. It just depends on when the income from your operation is coming in from the sale of the commodity that you raise. There are eligibility requirements that include such as creditworthiness, managerial experience, and you have to be the owner and operator of the farming operation. So direct farm ownership. This is when you purchase real estate. You can make major capital improvements such as constructing hog barns, poultry barns, and even dwellings if that is needed. We can go up to 40 years on these loans, and the interest rate as well is fixed depending on the month that we approve it or close it. The maximum amount of this loan outstanding is $600,000. You must also meet the eligibility requirements for an OL, but there also are other requirements for a direct farm ownership loan. You have to at least farm, or at least out of the last 3 years out of the prior 10 years. Like Angela was saying, there's certain requirements to purchase real estate as a beginning farmer. We don't really look as a beginning farmer as starting out at year one. For us, the beginning farmer is you have at least farmed yourself or managed another operation of 3 of the last 10 years. So we also have direct microloans, and these can be used for farm ownership or operating loan purposes. The OLs are still can be up to 7 years, but the FOs are up to 25 years. The interest rates on these are going to be the same as our direct operating loans or FOs, or they could be 5% micro loan rate, but usually they're going to be whatever the interest rate is for our regular OLs and FOs. The maximum amount you can get for this is $50,000 per loan type, which $50,000 FO or $50,000 OL. Eligibility requirements apply on these as well. The thing with a direct microloan is it's less paperwork, and it is more of for on a smaller scale. You could have the security type is different for these loans, and the eligibility requirements are a little bit different as well. You still have to have the managerial experience. The interest rate's never going to exceed 5% on the micro loans. 100% security is all that is required for these. So if you're going to purchase a tractor that is $20,000, the only security that we're going to take is that tractor for a term loan. Now, if you come to get an annual operating loan to say to put out pumpkins, mums, to put out a small crop, or to purchase livestock, we do have to have up to 150% security if it is available. So we also have our direct emergency loans. So for these, if there's a disaster in your area, our emergency loans are what can help replace what you have lost with this. You have to have a qualifying loss from the natural disaster, and it must be in the county that the disaster was declared, or a contiguous county. So these loans can be used for both real estate and operating purposes. Some of the purposes for the real estate can be used to refinance debts, replace land or water sources that cannot be restored due to the disaster. For a non-real estate emergency loan, our terms are between 1 and 7 years, and for real estate loans, up to 40 years. The maximum loan amount is lesser of the $500,000 or 100% of the actual loss. Whenever you apply for an emergency loan, we look at if it's on crops, we look at what you've been paid in your insurance, we look at yields, and we look at the market. And there's a spreadsheet that we run that will show us what the maximum loan amount is that you can get on these loans. Emergency loans used for operating purposes can be used to refinance operating debts, and they also can be used to pay essential family living expense. We have youth loans that are available to the youth in the ag community, or people or youth that are wanting to get involved in ag. It finances agriculture related products and projects. So dependent on the life and security of the loan, these loans can be from 1 to 7 years as well. It provides funding to youth to establish and operate income projected projects, and it must be supervised through either 4-H, FFA, or other organizations. So it's kind of like they have to have a mentor that's going to see them through this project. To get a youth loan, you must be at least 10, but not yet 21 of age. The rate is going to be the same as our direct operating loan. So at FSA, we have developed programs to target a proportion of socially disadvantaged or underserved farmers. SDA loans targets both direct and guaranteed loans. The purpose of SDA loans is to remove the barriers that prevent full participation of those persons. So the SDA loans and minority farmers and female farmers, they are not going to have different interest rates, but these funds come from different pots. So if money runs out from a regular farmer, if you are a minority farmer or a female farmer, those fund pots still could have money. So that's the biggest difference, is that they're in different pots of money, but the interest rate and terms overall are the same for all our loans. Beginning farmers, as Angela said before, we have a different definition at FSA than what you would think. Their law requires FSA to target a portion of its direct and guaranteed farmers to beginning farmers. This kind of looks like the slide that Angela had shown. To be a beginning farmer as an individual or entity, you have not operated a farm for more than 10 years. You must meet the eligibility requirements of the program which he or she is applying. You have to substantially participate in the operation. And also for FO purposes, To be a beginning farmer, you cannot currently own land in 30% of the acreage size of the farm county. So we have a list of all the counties in the state of Kentucky and what the average farm size is for each of those counties. And when you're applying for a farm loan, say you already own 100 acres and you're purchasing 50 more. So 30% of the farm size for that county has to be more than 100 acres for you to still qualify as a beginning farmer. So briefly, the guaranteed loan program, we offer lines of credit, operating loans, and farm ownership loans as well. There is a maximum loan amount for this, and it's a combined of OLs and FOs and emergency loans of $2.425 million. So our lines of credit are used for annual operating purposes. The term can be between 1 to 5 years. Any line of credit term with greater than 1 year requires the lender to renew this every year prior to the funds being advanced. Security can be crops, livestock, equipment, or real estate. And in this situation with a guaranteed loan, because the lender services and is the one that supplies the funds, the rate is determined by the lender. Eligibility requirements are creditworthiness, managerial experience, tests for credit, and you have to be as well as the owner operator of the farm, same as the direct loans. Other uses of operating loans could be purchase equipment, purchase foundation livestock, minor capital farm improvements, and refinance farm-related debt. These are 1 to 7 years, just as the direct, but it's dependent upon the need and the life of the security. Security can be chattel or real estate, and the rate is determined on these as well by the lender. Farm ownership loans that are guaranteed, it's the same as the direct too. It's to purchase real estate, major farm improvements, or refinance farm-related debt. You can go up to 40 years, but this is determined by the lender. And again, it's just dependent on the life of the security. The rate on this as well is determined by the lender and the same eligibility requirements. So applications for farm loans are available at your local FSA office. You can go in there and visit with the farm loan team, and they can sit down with you and go over the applications, or all the forms are available at this website that is provided. You can never be denied an application or any other forms that you request from the FSA office. And our farm loan officers and farm loan managers are there to sit down with you and go over these forms as needed. Here is a picture of the state of Kentucky with all of our districts in it. So the counties that are in the dark colors are the counties that actually have FSA office headquarters. Not every county is going to have a farm loan team. We have 16 farm loan teams in the state of Kentucky. If you have any questions on where those are located, you can always just contact us. And there's a website for more information.
As Anna said, what's showing on your screen right now are the best two websites. It's as far as getting information on programs and loans. I always like to recommend the one that's showing there, the farmers.gov site. On that site are a couple of discovery tools, including a farm loan discovery tool that it just kind of walks you through an interview type process to help you determine what resources from USDA would best benefit you, so you can decide which loan might work for what you need. And then there's also a tool targeted for determining what programs might fit your needs. There is some excellent information on there for women in ag, for beginning farmers, and our other groups as well. So if you haven't already checked that site out, definitely do that. You can sign up for our newsletter at the website provided there. And when you register with the county office, they should enroll you in the county version of the newsletter as well. We don't throw a lot of emails at you, but you will get a monthly letter from the state of Kentucky for the whole state, and then one a month from your county office, as well as any special alerts that need to go out. So those are some really good resources for you to check out. And here is the contact information for Jeremy, myself, and Anna, as well as Warren Whitaker, who is also in the room with us and is a farm loan specialist. We are here and available to ask, try to answer any questions you might have. So Tiffany, back to you with questions.
Awesome. Thank you all so much. We had a lot of folks coming in throughout you all slide presentation. I hope, actually, there's somebody else popping in. You all had a really good attendance. I am going to begin with the questions that Lori and I have on chat. Hopefully it'll resonate with the other farmers in the room. Other farmers in the room, feel free to kind of look at some of the information. I will just briefly say, for some of y'all who came in, the direct farm loans and the programs, I think, are the biggest that I've heard from you all wanting to know more information. We have this recording, we'll get it out to everybody. But some of y'all came in and missed the big farm programs as far as like disaster conservation, safety net, and risk management. Also understanding that if you go and get registered with FSA, that then makes you automatically registered for NRCS. And a lot of you all are wanting to diversify your farm or bring cattle, chickens, and all of this. These programs and the direct loans program will help you get those things set up. A lot of folks have been questioning, like, how can I get the stuff for my chickens, or how can I get the fencing to be able to separate because I want more cattle. There's folks on here who really just want to start cattle and chicken and processing and getting it moving, and these loans could definitely help with this. We also are working on a cooperative and a lot of youth mentor programs. So some of the questions I asked kind of around that too. So just want to throw that out there. So for folks that want to ask questions, you can wrap your head about what you want to ask these fine folks on here. So I will start with Lori's question. She said, must Native Americans be registered members of a federally recognized tribe?
No, those certifications are a producer self-certification. There are a couple of forms that you fill out in the county office, depending on, and there may be additional information. I believe they collect that information with farm loan applications as well. But no, you do not have to be a member of a federally recognized tribe.
All right. The next question, which was one of mine, what does the certification for being a limited resource farmers, like, why would one want to do that? What do you get from doing that?
The one that comes off the top of my head that is current right now, if you are a limited resource producer, one of our programs, which is ARC PLC is the acronym, and it's that is what we affectionately call our corn-based program. It is for people who have a history of growing corn, soybeans, wheat, and some other commodities, depending on which county you're in. The historical growing of that crop puts a base acres are assigned to the land. And if you qualify for a payment on those base acres, then you get paid. So if you are a limited resource, socially disadvantaged, which in that program includes women, beginning farmer, I don't know if veterans are included on that one yet. I don't think they have been added to that yet. But if you certify to one of those groups, then you can still receive a payment for base acres under 10. Otherwise, we do not pay anyone with 10 acres or fewer. Right now, limited resource. The other program is our Emergency Conservation Reserve Program, ECP, which kicks in when there is a natural disaster that has damaged ag land. It's what we consider to be a cost share program, meaning we will pay you 75% of the cost to restore the land back to what it was prior to the disaster. However, if you are limited resource, beginning farmer, or socially disadvantaged that does not include women, you get 90% cost share instead of 75%. The other reason you'd want to make that certification is we don't know what programs are going to come down next and how they might be influenced as well.
Got it. So my question is, and I hope I'm not on mute still. Am I? Okay. My question, a question to that question. Again, what was the program that you said for the payment? You use an acronym.
PLC.
Say it again.
ARC PLC.
Okay. I've seen these acronyms and I was like, what do those mean? But I
try to remember to explain the acronyms, but I don't always do a good job with that.
Okay, well, I've got that written down. And then there was something else that I was thinking of, but I couldn't think of. It was about the emergency funds reimbursement. When it comes to that, is that something that's been declared, or is it like the flooding in Eastern Kentucky? When it's bad is declared, but we deal with it all the time. And then like the tornado wind damage, my roof is off, right? But if it wasn't something that was like we had a statewide natural disaster, like what determines that? And then when should we come in and apply for those emergency funds?
That's a great question. We get that question a lot. It does not have to be a presidential declared disaster for the cost share program that I talked about. Some of the emergency loans, those kick in with a declaration. But when it comes to farm program side for cost share for restoration, that we do not have to have the declaration. That the county office, whenever there is any kind of weather that could potentially affect ag land, the county office manager and the other managers, if there are other service centers in there, will go out and do an assessment of what kind of impact that weather event had on the ag land in the community. And if they see that there is potentially enough damage to warrant the program, they will request that program. And so I always like to recommend that if you have had damage, you call the office and just say, oh, hey, by the way, you know that storm we had last night? Well, it blew the roof off of my barn and all my corn is laying on the ground. And then that way they know that there is a possibility, because maybe they live on the other end of the county and the sun was shining all day on their part of the county and they don't even realize that something happened on your part of the county. So that is always a good idea. And then from there, they know the steps to take. Once the program is approved, as far as they've requested it, it's gone through all the channels and gotten approved, they'll start advertising and there will be a sign-up period in which time you'll come in and file an actual application.
Awesome. Okay, thanks. This is good information. I didn't know about none of this stuff, so I am just like mind blown. Okay, so the next question: what does it mean to be unable to obtain credit from another lender? And I assume that's from the beginning conversation where you had to have a denial before you could ask FSA for money.
There are different. It can mean we have to document any loan that we make through a test for credit form that we utilize. So we have gathered lender information from other local lenders, and in some instances that can be sufficient to document that the individual is unable to meet the credit qualifications at the other local lenders. But there are other loan programs where we do have to ask the individuals to go get one or two denial letters from other local lenders. So it really depends upon which one of the loan programs that we're working with. Typically, you know, the difference there is going to be with our regular loans versus emergency loans and so on. But but it really just depends upon the loan programs. But those are the two things that often come into play on that.
Okay. And so I'll ask a question to follow up that question. So say I went to my bank and I got, we didn't go through the process, but they were like, I think you might not have the credit for it. I'm not even going to run it, right? But we went through the application and they're just like, oh, it's just, you don't have it. You're saying that instead of the actual physical denial might be sufficient for certain loans. But say if I didn't have a relationship with the bank and I come straight to FSA, would FSA then say, sorry,
we do our own underwriting programs. So if through our underwriting, we are able to determine, you may have never been to a bank, but through our underwriting, we determine that you can't obtain the credit from the lender for whatever reason. Maybe you don't have a down payment for your real estate purchase, or maybe your cash flow is not strong enough to get the commercial credit based upon the information that those local creditors have provided us. Then we wouldn't necessarily always ask you to even go to a commercial creditor. So it really is depending upon those programs and which one of it is that we're working with at that time.
Okay. The best thing to do would probably be to have a discussion with the local office and, see where you're starting and see what we can do for you.
Yeah, that sounds about right. Okay, so next question. Can FSA still help if a farmer wants to purchase property that already has a home on it?
There aren't any regulations that say that there can't be a home on the farm property. So in short, the answer is yes, but we do have requirements where we have to show that it actually is a farm. So the amount of income that's generated for the from the farming operation has to be proportionate to the loan payments on the real estate purchase. So we have to show through the income that we're generating that it is really a farm and not just a rural residence.
I was gonna say, can't even talk. Lori asked the question, but I'm for sure we're talking about the same farmer. We have a farmer who, is a homesteader, and they have a lot of, not a lot, but they have livestock and they grow produce small scale, and they need to move that to grow, and by moving they'll be leaving their home, so they need to have somewhere that potentially has a house, and or if a house was on it and they had to stay at the, it's complex, but I'm just saying I think that's what we were talking about, because they need homesteading small farm and they have a real farm business. So we just wanted to ask that question. Sorry. Okay. We have like 5 more questions. No, 3. Yeah. Next question, which was my question. Can youth loans be made cooperative? And when I say that, if there were several students who wanted to begin a youth farmers market, or some type of active youth ag program, could they, 4 of them, come together and take out loans to do a larger project? Is there anything, rules, regulations on how those work?
They could not. It has to be to an individual youth for an income producing project that's associated with a rural youth organization, rural youth ag organization.
Okay, so these are FFA kids. Let me say that. FFA kids wanting to build a youth farmers market. That's where we're at. And a couple of them are really interested in it in the summer, which is technically off of school hours. And we've been talking about it. So when I seen this, I was like, could this be something?
We couldn't loan for the farmers market, but we could potentially loan to the individuals for their production ag stuff. So like we could potentially loan to the youth for the production aspect of what they're doing, but we couldn't loan for the commercial part of the market or any of that type of stuff. So for just generally speaking, for FSA loan programs, they're targeted to production agriculture. So what we're involved in, the person has to be actually producing the loan has to be related to the actual production of the ag commodity and not necessarily just the marketing end of it.
Got it. That makes sense. That makes sense. Is there a maximum on youth loans?
$5,000.
All right. And one more question from the chat. Can ownership loans be combined with operating loans for a startup enterprise?
Those are going to be separate loans. Your real estate loan is going to be a farm ownership loan because it will be at different rates and different terms than your operating loan will. They can be made at the same time, but they're going to be two different separate loans. Was that your question?
Yeah, I think I'm thinking, yeah, because I would assume from this question, and Lori, you can chime in if I'm saying this wrong, but it's like, could I be working on this ownership real estate while working on my operating loans and having two different loans at the same time at FSA, making those payments, but using them at the simultaneously doing those? And you're saying yes, yes, we can. All right. We have another person who's jumped into the chat. Into the oh, okay. Hold on. I've been really trying to copy and paste these in notes. So sorry. Give me 1 second. We got a few more questions, and we will do questions maybe for like another 5 minutes. And I will try to not go down rabbit holes when I'm when I'm asking questions. This is a really good informative. So question is, what are the roles of county committees?
Our county committees are made up of farmers in each local service center area, and they represent the farmers in the specific section of the county from which they are elected. They are elected by producers, and their primary role is for they oversee program application approvals, and they manage the farm or the office manager as far as that kind of thing goes. They pull whether they monitor weather data and crop data. So when I talked earlier about that cost share program for emergency programs, that's one way, maybe the county committee person for that particular section of the county can say, hey, by the way, I wanted you to know my part of the county got hit really hard. I'm hearing from the producers I represent say, this happened and that happened. Could you come check it out and let's see if we need to implement that cost share program or something like that.
And there is more than one committee per counties, right? You said it's based on how there's
more than one person per county. Yes, there's at least 3. Most of the time, and some it's up to 5 or 6, depending on the size of the county. Or I know in my home county, my service center was 2 counties combined, and so we had 5, and they represented both counties. They were pulled from the areas of both counties in my service center.
Got it. I know we had a farmer who was going for a committee, and they said that she didn't live on the right side of the road to be a part of the committee. And I was like, what?
Well, so that probably just means her seat wasn't vacant at that time. The county is divided by physical attributes into sections, and those seats become available for election on rotating basis. Yeah, so, you serve 3 years at a time, and a seat is available. There's a seat available every year, but it may not have been the one she wanted. Her seat wouldn't have been available for a couple more years or something like that.
Got it. Okay. Next question. Are down payments required for ownership loans?
No, ma'am, down payments are not required. We do have one program that is called the down payment loan, and it is for beginning farmers. And we do, at the purchase price, the sales contract, we do 45% of the request amount. A bank does 50%, and the borrower puts down 5%, and you get a 1.5% interest rate for, how many years is it? Up to 20 years.
That's just that one.
But that's just that one loan program. All of our other FO loans to purchase real estate or OL loans, you don't have to have a down payment. We can do 100% financing.
Okay. The next question is, what is the importance of the receipt for service? Good question.
We use receipt for service just to keep a record of our contact with producers and other contacts. And it's a way of ensuring that we, like I said, just that we have a record that you were in our office and what we discussed with you. It's not a detailed record. It just says on such and such day, Joe Farmer was in the office, and you check that he signed a contract for this application or that application, et cetera. You are entitled to a copy of that as the producer, but it's just a running record.
Got it. Two more questions. Is there a minimum amount of space that can be, is there a minimum amount of space that can be deemed a farm? Like, and this will be a question I know for like urban farmers, like how much space is a farm? And then where can you find a list of those said requirements? And
Okay.
I'll assume your question for farm numbers.
Yeah, to get a farm number, it's generally 1/10 of an acre. And I don't know that's even, is that even in writing? Okay. Basically, the main requirement is that whatever you're doing, you are producing an ag commodity for commercial sale. You can't be growing a garden for yourself, but you can be growing garden crops for sale at a farmer's market. So you do have to commercially produce. That's the big thing. And you mentioned urban ag, and USDA this year is really making a push to include more urban ag. And so some of that could change. They may make specific requirements that are different to qualify for urban ag. But as far as taking a deed in and getting registered for a farm number right now with FSA, that's all you do. I mean, you can do that and get registered as long as you are commercially producing a crop.
And when you're commercially producing a crop for farm loans, you have to at least be making $1,000 in what your commodity, when you're selling your commodity. You have to generate at least $1,000 worth of income.
Awesome, thank you. That is great information. So for a loan that requires the 3 years of farming experience, can that be a filed income, like tax? I assume that's tax question, Kenya. Can that be a filed income or a Schedule C, or does it have to be filed on a Schedule F?
Usually for farming income, it's filed on a Schedule F, but it doesn't matter. We can use a Schedule C as well.
It doesn't have to be filed. A Schedule F is the easy way to document it, obviously, but that's not the only way. And it doesn't, we have to document that they have at least 3 years of farm management experience. It doesn't mean that they had to have owned their own farm for 3 years. The management experience could be that they operated or managed a farm for someone else for that period of time. So it's not even always documented through tax records. So there's a variety of different ways. The easiest way for any individual to know if they meet that experience requirement is to go talk to their local loan office.
It's like talking to them will really find it all out what you really need to have. I get it.
Yeah, when it comes to the loans and the programs both, because there is so much diversity in the way land is operated, the way it's owned, what kind of commodities you're growing. That's why our local service centers, the people that are there in your community, are the go-to source for all of this information. We're obviously here and willing to help with whatever, but they're going to be the ones that can make the loans and the programs both tailored. You know, they can tell you what's going to best fit your needs and your situation.
Every farming scenario is going to be different for each operation. So each individual basis, like Angela just said, the best thing to do is go into your local office and talk to them about what your plan is, what you're currently doing, and where you want to go from there.
We got one more question. What is the average time frame on a direct loan process from application, approval to final closing?
It really depends upon what the loan request is for. Like, for instance, you know, we try to, our goal is to have it done within about 30 days, but sometimes that's not the case. The handbook requires us to do various different types of environmental reviews for specific requests. And so there could be instances where if it's an elevated level of environmental review, it may take a year to approve it, just because we have to have the person go out and get all of these environmental compliance documents, such as the nutrient management plan, and so on. One of the things that you know, we work up applications in the order in which they're received complete. So to help speed the process up, the quicker that the applicant can get the information requested into our office, the quicker they're going to get in line for the processing of those applications. And if information is requested, and once we get a complete letter or get a complete application, that's when we're really going to be working on the application as we get it. But once it's complete, that's when we're really potentially able to do something with it. So any of that information that's requested of you, the quicker you can get it to the farm loan officer or farm loan manager that's requesting it, the quicker your application is going to get processed. But that can vary greatly, like I said, depending upon what the request is for.
Right, like a bigger, yeah.
Yeah, well, not even that. It depends on the level of environmental review, or a real estate. From the time that the application is received on a real estate request until the loan is potentially closed is almost always going to take longer than an operating loan request, because there's deeds and attorneys and appraisals and all of those things that come into play as well.
Okay. Thank you. So people shouldn't think like, oh, it's a big loan, so it's going to take the longest. It's really about your preparation and how far along you've gotten with your registration and your farm number and all of those things. And the more prepared you are, the quicker it will go through, regardless of size of loan and how many loans you're going for.
That's correct. And generally speaking, a request for a real estate loan is almost always going to take longer than a request for an operating loan. Of course, that could be dependent upon the type of operation, but just it takes longer to get real estate loans closed.
Takes longer for real estate. Okay, hold on. I'm gonna make sure I write it down. And that's just because you have to do all that groundwork work. Takes longer. All right, does anyone have, we did a lot of questions. All this information will be sent out to everyone, and we can continue this conversation. These folks are here for you all, they're here for us. And so if once you look through the whole slideshow, if you all have any more questions, we can definitely revisit this conversation. I just want to make sure that everybody got their questions answered. I do feel like you'll have more questions. Some of you guys who came on a little bit later, once you actually see the slides at the very beginning around the farm programs, questions. Anybody have anything else they would like to add, say? This was amazing. These are a lot of questions that I've been wanting to know as well as a farmer here in Kentucky. And I have so much work to do. But we do appreciate you all. And at this time, I'm going to stop the recording. Give me just a second.